Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Thursday, December 16th. Stocks are set to open modestly higher on Wall Street as traders digest the latest data on the real estate sector and the labor market. Housing starts rose nearly 4% last month following a big drop in October that pushed the annual rate near a record low. But building permits fell to their lowest level since last April. Meanwhile, just 420,000 Americans filed for first-time unemployment benefits last week, 3,000 fewer than the previous week, a good sign for the employment picture. Later this morning, the Philadelphia Fed will release its Business Outlook survey for December.
Investors also remain focused overseas, where European Union leaders are gathering to discuss ways to tackle the sovereign debt crisis. Europe's debt problems have led to bailouts for Greece and Ireland, and just yesterday, Moody's Investors Service warned that it may downgrade Spain's credit rating. Analysts don't expect the two-day summit in Brussels to yield any major new solutions, such as making more money available to backstop governments or creating European bonds. Instead, it's likely EU leaders will focus on adopting a mechanism to resolve future crises.
Some earnings news may move the markets today. Shares of FedEx are falling 2% ahead of the open after it fell short of earnings estimates for the latest quarter. FedEx blamed the miss on higher costs during the quarter, but said the holiday season is going better than expected. Rite-Aid is also losing ground in the pre-market. The drugstore chain reported a $79 million loss and smaller revenues in its fiscal third quarter. Rite-Aid said same-store sales will also fall short of expectations and cut its forecast for the full year. Meanwhile, General Mills reported a 9% increase in its profit, but adjusted net income missed Wall Street estimates. Those shares are losing 1% right now.
Several analysts are making calls on food and agriculture stocks this morning. Goldman Sachs resumed attractive ratings on U.S. restaurants and called Starbucks its best investment idea in the sector. Goldman has a conviction buy rating on Starbucks, and Citigroup recommends buying the stock along with Darden Restaurants. Stern Agee placed a new neutral rating on Kirkland, and Jefferies is out with calls on several companies in the industry. Tyson, Smithfield Foods, and Bunge all got buy ratings, while Hormel Sanderson Farms, Corn Products, and Archer Daniels Midland were rated as holds.
The energy industry will be back in focus today after the Obama administration filed a civil lawsuit against BP and 8 other companies. The government claims that negligence and lax safety procedures led to the worst oil spill in U.S. history earlier this year. One of the other defendants, Transocean, is falling 3% in pre-market trading on news of the lawsuit and a stock downgrade by Morgan Stanley. Elsewhere in the sector, Bank of America cut its rating on Progress Energy to neutral, and Goldman Sachs recommends buying Peabody Energy and selling Patriot Coal and Consul Energy. BB&T Capital Markets has a different take on Consul, upgrading it to a buy. And Dynegy is also getting a stock upgrade this morning. Pritchard is now calling the utility company a buy after it accepted a buyout offer from Icon Enterprises yesterday.
Shares of Bank of America are rising 2% in the pre-market. The Wall Street Journal reported that the company is in talks with large mortgage investors to settle claims, which would mark a major shift in strategy for Bank of America. Separately, KBW cut its rating on Bank of America to market perform, saying it may not raise dividend until 2012. KBW also downgraded BB&T, and Atlantic Equities cut Goldman Sachs to neutral.
And finally, let's turn to the technology sector. Shares of Apple are set to open higher after both JP Morgan and Kaufman raised their stock price targets and EPS estimates for the company. JP Morgan says that Apple could still control more than 60% of the market for tablet computers by 2012, and that the total market for tablets could reach $34 billion by then. Meanwhile, Citigroup is calling Adobe its top software pick, and Oracle was upgraded to outperform by Macquarie. Oracle will report its earnings after today's close, along with Research in Motion. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.